Hello and good morning, folks. Welcome to Almus Market Mornings. We bring to you the latest updates every day from the financial markets. The problem with these latest updates is that often I find it so tricky to prepare for this introduction, especially during President Trump's term when the tariff updates remain so fluid. As of now, from what I have been reading, there is some uncertainty when it comes to the July 9th tariff deadline. President Trump said that there would be letters being sent out starting today, while Commerce Secretary Howard Lutnick says the tariff will go into effect starting August 1st. Let's understand this in detail from JK. Good morning, JK. Can you help break this down for our listeners? Can we consider tariffs being postponed once again?
Hey, good morning, Swaraj. Uh, yes, I think it's an admission that bilateralism has not worked, and achieving a comprehensive trade deal, including tariff and non-tariff barriers, is not so easy with so many countries. And this is what even the administration has admitted. So they have now adopted unilateralism with some concession in time up to August 1st. As tariffs are now unilaterally fixed by Trump and mailed to countries, maybe it's the hope that countries will be forced to complete the negotiations by that time. And according to reports, letters have been mailed to 12 countries, but the names have not yet been disclosed. To answer your question specifically, I think rates are fixed now and they go into effect from August 1st. So it's not that it's not that the pause is continued, but it is just that the effective date is fixed for August 1st. And of course, my view is that there may well be another concession of some sort, but Trump says tariff may go up to even 70%. Treasury Secretary, in the meantime, says the tariffs may actually go back to April 2nd levels if the countries don't reach an agreement. So it's all chaotic, but markets have now learned to live with chaos, and hence that's we are seeing the calmness that in the market. Not much of a reaction has been seen. Um Weekend news is the OPEC surprising the world with higher than expected output increase. By 548 barrels 548 barrels per day. 411,000 barrels per day hike was expected. Now this is a process that the OPEC has been achieving, because they had cut up to 2.2 million barrels per day when the prices were falling big. And now they are restoring it. Now they are almost nearing those pre cut levels. And these are also doing this because many countries, although quotas were fixed, they were actually exceeding the quotas, and so this only an official sanction of higher output. There's also some theories that by they are aware that these increases will again pressure the prices down, and this could actually shift the production base to countries which are having a low production cost. Like US may be one which is most affected because their costs of crude output and refining is much higher, and these levels of closer to $65 per barrel will be very uneconomical. So this is not going on with the energy market, but in the process, countries like India are benefiting because of lower prices, and lower trade deficit is what one should expect. And this indirect price war is probably what is going on. Uh, on currency side, the dollar has been trying to make a comeback. The technically there's some oversold condition that we are seeing after falling for 7 consecutive weeks and also 5 consecutive months. And historically, I have seen that when dollar falls or rises continuously for 5 consecutive months, there is some sort of a reversal, short-term reversal that happens, and that is not ruled out right now, considering that market has already discounted many of the negatives. And uh, you know even there are some fund managers who's now seeing that we cannot write off the US exceptionalism totally. And if you look at the US markets, they have done extremely well. particularly the stock market. They are now trading at all-time highs once again. Dow is just about to do that as well. So it's a strong comeback that the dollar is trying to make, but then we'll have to wait and see. And of course, talking of comeback, it was what a comeback from Indian cricket team as well, because after having lost the first test, they came back very strongly to beat the England team by over 300 runs margin. So that was a feel-good factor for India. Indian rupee on Friday was again tied to a narrow range. In the absence of US on Friday, there was little movement overall in the currency market as well. But the markets are likely to take cues from the global risk sentiment, which is now kind of at a very crucial point. Whether the markets will rally further from here, we need some impetus. Tariff issue is not going to give that, and perhaps the earnings report, which will start in the next few days, if it can surprise on the positive side, that can give some impetus to the markets. So the dollar remains vulnerable for some, not vulnerable, actually primed for some recovery. But we will see what factors play out. And of course, the job market report was also supportive of that. In USD INR, forex reserves rose by nearly 5 billion as on 27 June and touched 702.78 billion. That's just a shade below the all-time high of 704 billion. And of course, this is the headline reserves because RB also carries about 65 billion of short position in the futures, whose maturity extends up to 3 to 5 years as well. So, however, it's good to see that even the forward position has come down from a peak of 90 billion to 65 billion now, which means that RB has been mopping up and meeting those liabilities as and when they mature. So, rupee, nothing to say that its stability is threatened, but it will definitely follow the global cues and the trade deal between India and US. Again, there was much talk about that deal being signed before 9. It looks like only a limited deal will be signed in the next 2 days, and a larger comprehensive deal will be once again postponed because of so many other issues. If you look at the finance minister's statement that India's interests will be protected in a trade deal, uh, so when it also indicates that there are issues on which there are tough negotiations. So we are opening the week with a lot of uh, clarity to come about in many things, and dollar itself looking like wanting to recover. Gold has already given some sort of a indication that dollar has been strong, but we'll wait and see. It's a long week now. Thank you.
Thank you, JK. And I think everybody is now sort of seeking updates when it comes to tariffs. As you mentioned, that some letters are being sent to over 12 countries. But largely, when it comes to India, it looks likely that a mini deal is being signed, but a larger deal, it will take some time. That's what it looks like as of now. On Friday, we of course had quite limited movement due to the dollar holiday on account of July the 4th. Uh, and but when it comes to the trade side, it looks like dollar, which remains range bound as of now, it seems favorable for a recovery because it's sold for so many months consecutively now. When it comes to rupee, it was in a tight range, not much of a movement on Friday, considering it was a dollar holiday. RBI's forward book has also come down meanwhile from over $90 billion to near about $60 billion. So that's something to look forward to. On the energy side, OPEC surprised the world with higher than expected output increase by over 5.1 lakh barrels per day. The expectation was that they will increase the output by 4.1 lakh barrels per day approximately. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.